Undergoing map changes is something we all experience in order to have the most accurate maps possible available for our use. This module explains why map updates are necessary and how to best prepare yourself so that the financial impacts will be minimized. Flood risk can and does change over time. Flood risks change for many reasons, such as new development, changes in levee classification, and environmental changes, to name a few. As a result, FEMA is updating flood hazard maps across the country. These new flood maps, also known as Digital Flood Insurance Rate Maps, or DFIRMs, show flood risk at a property-by-property level. When new maps are issued, your risk may have changed as well, along with your flood insurance requirements. If your property is mapped out of a high-risk area, your flood insurance costs will likely decrease. If you've been mapped into a high-risk area, you will be required to purchase flood insurance if your mortgage is through a federally regulated or insured lender. But you can save money with the PRP eligibility extension and through a process known as grandfathering provided by the NFIP. If your property was newly mapped into a high-risk flood zone after October 1, 2008, you may qualify for a PRP flood insurance policy. For those redesignated from a low-risk to a high-risk area, flood insurance purchase is mandatory. Flood insurance will be federally required for most mortgage holders who have federally backed loans. Insurance costs may rise to reflect the true high risk. To ease a homeowner's transition from a moderate to low risk area to a high risk area, which would require the mandatory purchase of flood insurance and an increase in flood insurance costs, the National Flood Insurance Program is extending eligibility for the lower cost preferred rate policy to properties that were remapped on or after October 1, 2008. Grandfathering is another way of saving money. The National Flood Insurance Program has grandfathering rules to recognize policyholders who built in compliance with the flood map in effect at the time of construction or who maintain continuous coverage. Sometimes, though, using the new flood maps can actually result in a lower premium, especially if the home is high enough above the base flood elevation. In addition, buildings newly mapped into a high-risk area may be eligible for the lower-cost preferred risk policy for 2 years after a map change before they grandfather into the lower risk zone rates. The NFIP wants to ease the transition for property owners who have been newly mapped into the high-risk flood zone and the mandatory flood insurance purchase requirements that go along with map changes. If your property was newly mapped into a high-risk flood zone on or after October 1, 2008, you may be eligible for the lower-cost preferred risk policy for up to 2 years after the latter of the following 2 dates: the effective date of the map revision or January 1, 2011. Property owners of buildings that are newly mapped into a high-risk flood zone due to a map revision on or after January 1, 2011 are eligible to receive a lower-cost PRP for 2 policy years from the map revision date. On the 3rd year, they may then be eligible for additional savings through grandfathering. Talk to your agent. Previous and current flood zone documentation for your property will be needed to validate your PRP extension eligibility. Historic maps and current effective maps are available through FEMA's Map Service website located at www.msc.fema.gov. If you have questions or would like more information, you can call the NFIP Help Center at 1-800-427-4661 for assistance. You can take advantage of grandfathering by buying a policy before the new maps, known as Flood Insurance Rate Maps or FIRMs, take effect. You'll likely qualify for the NFIP Preferred Risk Policy, which covers buildings and their contents for as little as $129 for the first year. After the new maps become effective, you can now renew the PRP for 2 years. On the 3rd renewal, you will qualify for the standard rates associated with moderate to low risk zones rather than high risk zones. This could add up to significant savings because otherwise the property will be rated using the high-risk flood zone on the new map. For older structures built before the community's first flood map was issued, known as pre-FIRM buildings, this is the only grandfathering option when they are mapped into a high-risk area. Structures built after the community's first flood map was issued, post-FIRM, have 2 opportunities to lock in the flood zone or base flood elevation. You can purchase a policy before the new maps take effect, or you can use the grandfather rule if you have proof that your home was built in compliance with the flood map that was in effect at the time of construction. Your insurance agent can help produce the necessary documentation. Note that in some cases, the new flood map may actually result in a lower premium than what grandfathering applies, so have your insurance agent check all options. This chart can help you determine which steps to take to incur the lowest insurance premiums available to you. More details can be found at www.floodsmart.gov under the Flooding and Flood Risks heading, Undergoing a Map Change, and Grandfathering. When your designation is changed from high risk to low, flood insurance is optional but recommended. The risk has only been reduced, not removed. Flood insurance can still be obtained, and at lower rates. Even though flood insurance isn't federally required, anyone can be financially vulnerable to floods. People outside of high-risk areas file over 20% of NFIP claims and receive 1/3 of disaster assistance for flooding. When it's available, disaster assistance is typically a loan you must repay with interest. Conversion offers savings. An existing policy can easily be converted to a lower-cost preferred risk policy if the building qualifies. Note that lenders always have the option to require flood insurance in these areas. An increase in BFE can result in higher premiums. However, grandfathering can offer savings. The National Flood Insurance Program grandfathering rules allow policyholders who have built-in compliance with the flood map in effect at the time of construction to keep the earlier base flood elevation to calculate their insurance rate. This could result in significant savings. Home and business owners, make sure to check with your agent at your yearly renewal time or earlier if a map change is announced in your community. Insurance agents check at least once a month to stay informed of any changes and how they will affect your customers. Realtors, when listing a house or showing a prospective buyer, check to see if map changes may be occurring that could change the level of flood risk on the property of interest. Lenders, when issuing or refinancing a mortgage, check to determine if flood insurance is or will be required. And contractors, check before planning construction to help decide where and how to build. For more information on when your maps are being updated, you can check floodsmart.gov or contact the Kentucky Division of Water.